India continues to remain perhaps the highest performing economy among the major economies of the world. India is being looked at as an alternative to China, but we are also getting to see some degree of very active interest being shown in the Indian economy in sectors where India has not really attracted investment before.
India's major companies are struggling. That's visible in some of the top stocks steadily falling over the past week. Now, the country is still experiencing good growth, but not as fast as it used to be. So what can India do to keep up its extraordinary growth? Well, today I'm joined by Amitendu Palit. He's an economist at the Institute of South Asian Studies in Singapore, though today he joins us from Kolkata. Amitendu, welcome to our program. Let me begin by asking about the stock indexes. Why are investors so skeptical right now of what they're seeing?
Yeah, it's a bit of an interesting spot that we see for the Indian economy, as you very correctly mentioned. On one hand, the macroeconomic fundamentals are pretty strong by relative global standards. India continues to remain perhaps the highest performing economy among the major economies of the world, projected to grow at around 7% plus for the FY 2024. But on the other hand, if we look at the capital markets, we have seen the emergence of a trend where the foreign portfolio funds have actually indulged in extensive sell-offs. Perhaps one would come to the conclusion that realistically speaking, rationally speaking, the fundamentals were strong, good enough, but notwithstanding those, the valuations were high. And I think when the institutional investors sense that there's not much point in fresh buying, and it's good to book as much of the profits possible at this point in time because you are getting into the last quarter of the calendar year.
So just to be clear, real quick, I want to interrupt there real quick. I mean, to do. In other words, you're saying that there was a bit of exuberance into some of these stocks that is now correcting. That there would be a
Yes,
correction in
yes,
terms of
yes.
some of the value is falling back down after that kind of initial excitement over these
You are
companies.
right. And let's also not lose sight of the fact that the foreign institutional investors had been engaged in very robust buying for the whole of 2024 and also for a considerable part of 2023. So they were obviously keen on recovering their investments.
I want to throw one more factor in there and see what you think about that, and that is inflation in India itself. What does that mean for domestic consumption and the outlook for a lot of these companies who are very active in the domestic market when prices are rising for consumers?
Well, look, I think inflation is a serious factor. There's no denying the fact because right now we are seeing retail inflation at a level which is actually beyond the bandwidth which the Reserve Bank of India would have liked the numbers to be inside. It has crossed that bandwidth. It's not a source of great comfort. But on the other hand, the point that I'd like to mention is that look, we have seen inflation softening over the last 1 year or maybe 15 months. That is where, Steve, I
Mm.
want to draw your attention to the fact that while there has been sell off from the secondary market, there are interesting examples of new IPOs that have come into the market, which have been
Okay.
pretty handsomely subscribed. By like say for example, the delivery apps like Swiggy and Zomato, they have seen good subscriptions. And I think there's also this other factor which is affecting investors' minds that there are a lot of these typically quote unquote green companies, you know, which have gone into the market whose shares are swinging because we don't really know what is going to be the outcome of COP29, whether the US will stay committed to this agenda. There's a lot of contingent funding based on that. So I think there are a lot of ifs taken together which are now impacting.
So on the one hand, we could say that there's some cyclical aspects potentially to what we're seeing right now, but also there may be some structural changes. When you talk about the
Right.
election, for example, what do you see happening in the next year or so?
Two things, Steve. I think one, of course, there is a slow realization of the fact that a Trump presidency might actually not be too bad for India. In fact, in some respect, it might actually give India certain respites in some respects, particularly with respect to the way it reacts with China, the way it reacts to neighborhood. And if you recall, the last time when President Trump was around towards the very end of his office, India and the United States were very close to working on a free trade agreement. They came,
We know that some
very,
of
very
his
close.
nominees, for example, so we know that some of his current nominees are very much favorable to India. That
Correct.
must Be a good
Right.
sign for the economy, I would think.
It's strategically a good sign, but then, Trump presidency typically from the past is characterized by unpredictability and the fact that he has, uh, on a few occasions, referred to India as one of those countries which maintain high tariffs. And India does run a fairly strong trade surplus with the United States. There are still some uncertainties, but I think it's beginning to come down to the fact that this is not a bad deal and it is possible to work out deals with the United States administration, which could provide some kind of degree of comfort. So that's one. But there is another factor which I think we need to consider. There are domestic elections going on in India. And one of those elections is actually happening today. It is in the very important state of Maharashtra. Maharashtra has Mumbai, which is the financial capital of India. And what happens in Maharashtra is definitely going to have an impact on the short to medium term political course of the country. Because while from political point of view, we do tend to take a look at the way the federal government or the national government is functioning. The reality is that there are states in India which are very important movers and shakers of the economy. And Maharashtra is typically one of those states, which has a very strong amount of wealth and investable surplus in it. So whosoever has the political capital and control of Maharashtra will necessarily be in a position to make an impact on the country's finances going ahead. So I think there is also some bit of uncertainty coming out from there. And then finally, the fact that we are still out of the woods in the sense that we do have difficulties in the neighborhood around us. Bangladesh, for example, one country with whom India has had very stable political relationship over the last 10 to 12 years, is right now not in the best of conditions. Sri Lanka has had a new government, but the economy remains pretty much depressed. Pakistan is not going the right way. So India does have a difficult neighborhood, and all difficulties over there tend to create their economic spillovers on the country.
I want to come back to, you mentioned the states, of course, versus the federal policy as well in India and how important those states are. I want to come back to that in just a moment. But I want to ask, first of all, we've also seen that FDI, foreign direct investment in India, has fallen off a little bit more recently than than it was in past years. Is that a concern as you look at the need and the desire for India to continue growing its manufacturing base? Where do you assess those manufacturing efforts right now?
Today, you're right. The flow is perhaps less than what it was before. But we are also getting to see some degree of very active interest being shown in the Indian economy in sectors where India has not really attracted investment before. Semiconductors, for example, is one area. The clean tech is another area. But here I sense there's a problem. The problem is that for a lot of investors, particularly from the G7 and the West, India is being looked at as an alternative to China in the sense that it is a very active part of the China plus one diversification strategy. But there are economies. Yeah.
Just to clarify real quick, China plus one, meaning that companies should diversify their supply networks, have China as their, in many cases, typical or traditional supply network, but then have another alternative in case things go south with China, and India has often benefited from that. Please go ahead.
That is exactly what I was trying to say. And in fact, the best example of that will be the diversification that was demonstrated by Apple, which has pulled out a significant amount of its production from China and with the iPhone 15 and iPhone 16s and the rest of the smartphone Apple product ecosystem being now pushed up from India. But I think what is likely to happen is that there is a tendency in these sectors and strategic industries to locate as much of the supply chain as possible within India and countries with whom there is a certain degree of political comfort. Now, that economically is not always an easy solution to have. Politically, it makes a lot of sense. But economically, you don't really always get that set of conditions within which there would be a cost benefit ratio which is favorable to the producers. I think what we are beginning to see is a slow growth of investment and a degree of comfort settling into semiconductors, into clean tech, and certain other areas, but it's going to take time. But on the other hand, what we are also beginning to see is that when you look at the upper end of supply chains in the knowledge incentive sectors, we have practically all major businesses of the world who have invested in what we typically call the global capability centers in India, which are more on the R&D design, innovative kind of space.
Is it possible, another alternative here, someone could say that perhaps India has rested a little too much on companies' China plus one strategy without offering enough incentives for companies to come there in the first place? We know that India can often be difficult in terms of its tax policy, in terms of some of its protectionist rules. Is that somewhere where the federal government or the state governments have lagged in terms of making it actually attractive and not just depending on companies to come to India just for the sheer need to strategically diversify?
I think that's a very important point that you raised, Steve, and I think there's still a lot of movement that India needs to make. But that movement within the country is not in a uniform character. There are some parts of India which have done much better than other parts. And there are states like Gujarat, Maharashtra, Tamil Nadu, Karnataka, which typically have been the front running industrial states and they continue to remain the front runners. But there's probably a level to which there is a certain degree of saturation. And in fact, here, I'd like to share with you something interesting. Some of the work that I have done recently actually points to the fact that since COVID, India followed this public investment led economic recovery strategy. So you have seen huge amount of public investment that has gone into infrastructure, that has gone into the front facing industries. Now, the expectation was that public investment cannot last forever. The expectation was that public investment would be able to generate that amount and interest in private investment, which will actually come through and fill up the vacuum. We don't see that much of private investment coming in yet. Now, there could be various reasons for it. One of which is clearly the fact that you alluded to. There's still some ground to be covered when it comes to cost of doing business. But that's not the only factor, because if cost of doing business is the factor, then there's no reason why investments would have gone to Vietnam also, because Vietnam is not typically very high on the cost of doing business. But I think India is a country where investors are sometimes confused between whether to look at the domestic market or to look at India as a location from where they would want to export to other countries.
I was just going to say, is it also possible that these efforts being led more by the states instead of the federal government in many cases, that they're happening in a haphazard way that isn't creating overall scales of economy for these companies when they come in? I would imagine infrastructure, for example, that often travels between states. Where is the divide between what the states are doing and what the federal government is doing? Is the federal government doing enough?
I would argue that when it comes to the states, they don't necessarily always need to provide financial incentives. But what they need to do is to extend capacities in certain other respects. Like, for example, there's a serious problem that is now in India with respect to the availability of skills. There are many skills that are available, but unfortunately, these skills are not necessarily matching with the requirements of the industry. This serious skill mismatch is something which the states need to work on. The states need to look at the kind of investments that are going to come in there. For example, if you look semiconductors, if you look at the possibility that most of the investments are coming into the assembly, testing, and packaging scenario of the supply chains in semiconductors, then states need to ask themselves the question that do they actually have the labor resident in their geographies, which will be able to take care of this particular operations in which the investments are coming in, because it is not conceivable that you actually import labor from outside the country. That doesn't work that way. For a big economy like India, it's neither economically nor politically a sensible step. So this is an area where I think the states really have to focus a lot of attention. Unfortunately, I think that is not something that is happening at the state level the way it should, as a result of which we have a peculiar situation. There are people who are coming out from the best of institutions and they're not getting the jobs by the amount they should because their skills and qualifications are not matching with what the industry requires. On the other hand, the industry is not able to expand the way they should because they're getting the right amount of skills from the market. So this is, a very complicated situation, and I hope this gets addressed sooner or later.
And right now in Delhi, there's a very fragile coalition government. What can it get done in this regard when it comes to these great pushes? Even if a lot of this does belong to the states, it has a major role in this as well.
There was definitely an apprehension when Mr. Modi came back for the third term this year that for the first time in his three tenures, his party doesn't have an absolute majority on its own. But I think that understanding has more or less now stabilized around the fact that while he does not have as much numbers as he had in the previous two tenures, the opposition also is not charged enough, robust enough, organized enough to actually provide a very serious threat to the situation in which he is in right now. And I think there has not really been any reversal of the policies. Policies have continued, but there are areas of economic reforms which still remain pending. The question is by what extent this government will stay committed to that. I think the government's focus right now, following the election results, is very significantly on creation of jobs and employment because that was accepted to be one of the reasons which led to the less than satisfactory performance of the government in the last elections. If that is the idea, then sometimes hard and politically difficult economic reforms take time to come through because then in that case it's more focused on the kind of generation programs supported by public funds that would create employment, which actually is a very serious issue out here in India. Fortunately or unfortunately, the opposition, even in the state government elections, is also not able to provide conclusive solutions to these. So it's kind of not going anywhere, but it's not the best of things that you would want to live with because unless the employment creation happens, growth is not going to be inclusive. And at some point of time, this is going to get saturated again.
All right, that's Amitendu Palit. He's an economist with the Institute of South Asian Studies in Singapore, and he joined us today from Kolkata. Amitendu, thank you very much.
My pleasure, Steve.